Hello everyone and welcome to today's Morning Report chart appraisals on Friday the 9th of September with me, Rich Perry, market analyst at Hantec Markets. We've got a relatively sort of subdued and quiet open really. Nothing too significant in terms of direction, slightly risk negative, and that's come in the back of two events that we had yesterday. We had the ECB meeting whereby Mario Draghi and the ECB didn't move on interest rates or quantitative easing. That was somewhat of a little bit of a surprise because the end of the QE programme is March 2017. It could have been extended. But apparently it wasn't even discussed. So Draghi was fairly sort of forthright in his views that again he wants to see the heavy lifting also taken on by the national banks as well in terms of fiscal stimulus and structural reform rather than just the monetary easing that the ECB is doing. And he suggests that the ECB is ready to act and can act on easing, but just this time out decided not to. So the markets took that as slightly sort of risk off. Equity markets certainly fell away, and interestingly enough, the euro obviously rallied on the back of that. But into the afternoon, also the dollar rallied, and the dollar rallied because of the oil inventories report. Now, the EIA oil inventories report every week does create a lot of volatility on the oil price, but this time there was a surprise inventories drawdown of 14.5 million barrels. So that's actually a very significant drawdown, and it subsequently sort of drove inflation expectations in the States, and inflation expectations going up means that sort of the expectation is that possibly the sort of rates might have to go up. It's very minor near-term blip that we saw on the Treasury yields, but certainly it had an impact on the dollar, just pulling that dollar higher. But the move is slightly unwinding a little bit today. Euro's stronger and the yen also notably stronger. But what we have had is this sort of risk-off theme running through into today again, and the Aussie and the Kiwi are lower today, and also the oil price is just unwinding some of that move today. So that oil price was sort of 4% higher yesterday. It's just unwound some of that back, given some of those gains back today. So it'll be interesting to see where the oil price settles today, but certainly at the moment it's marginally sort of risk off. So what have we got to look forward to today? Well, there's not a great deal out that we're looking at today. We've got the Canadian unemployment numbers at 3 o'clock, and that's expected. Let me just show you the calendar on Reuters. Here we go, the calendar on Reuters. That unemployment data annoyingly is not on the first page, so go on to the second page. It's not there either. Hang on, what's going on here? My mistake. Canadian unemployment is at 130. Sorry, my mistake. But yeah, it's expected to basically stick at 6.9%, and marginal improvement in the unemployment in the employment numbers as well. So that's today. But much beyond that, we've had out this morning the Chinese inflation data, and it was a surprise drop in the inflation data to 1.3%. From 1.8%, so a big drop there. But also the PPI numbers were improving, continue to improve. 1.7% negative last time. That's improved to 0.8% negative this time out. So those factory gate inflation numbers improving should help corporates with their sort of profit margins and their pricing moves. So that should be a helpful move on China inflation, or certainly the PPI anyway. And markets have not really reacted to that. They're still sort of moving on the ECB from yesterday. Now that takes me to my chart today, which is the euro sterling. Now euro sterling, let me show you on the daily chart first of all, has been in this sort of downtrend phase for the last 3 weeks, but it's broken through that. You've got two strong candles that have broken through that downtrend channel, and the improvement can be seen across these momentum indicators. Stochastics looking like they're going to confirm with a buy signal on the stochastics today. An improvement in the RSI as well. It's now as though basically the euro sterling has sort of been in this range really for the last sort of few months, dating back to the sort of exit from the Britain's exit from the European Union. It's sort of marginally higher lows, you could argue. 83.40, the higher low the other day. Not not exactly, but it's sort of supported basically at that level, and just sort of pulling higher again, breaking that that downtrend channel. Now brings it into this sort of pivot line here. This pivot line throughout this sort of ranging phase that's been in place. Pivot line around 84.90. That is now the first test, and it actually turned lower from 84.95 yesterday. So it is interesting that that is a line that the market is clearly looking at. So it needs to break through that to sort of really concentrate and concentrate on an improving move higher. Now you look at the hourly chart, you could say, well, you've certainly broken this whole downtrend phase that the Euro sterling had been in. The momentum indicators have certainly taken on far more of an improving outlook, with the RSI having previously sort of failed around the sort of 50 point, is now sort of building higher and holding on to this improvement. Also the MACD line's well above neutral, and it looks generally as though sort of the sequence of lower highs and lower lows has been turned around, and you're now seeing higher lows and higher highs in the past few days. The improvement is sort of building on this sort of breaking out of the I mean, there's no real base pattern of any note, you'd argue. Nothing that really springs sort of springs out from the chart, but certainly there is a support band, you'd argue, between 84 and 84.20. Also initial support coming in around about that sort of breakout level at 84.50 as well. So there is an element of support that you can certainly point to, and the little corrections seem to be sort of supported now. So you'd want to see a breakout through that 84.90. That would open at 85.15, which is again sort of a minor pivot line. Nothing too significant really in terms of the resistance until you get to the level up from sort of late August around sort of 85.70. So there is room for this improvement to go, and I think what we are seeing now is if you can get this daily chart through that 84.90 level, then the improvement could well continue towards that 85.70 mark, which is this level from late August. So an improvement in euro sterling is coming as the euro has sort of turned a little bit of a corner against the dollar. So I wish you good luck in your trading today, and I will speak to you later. Thank you.